Well, the minutes show not much daylight among Fed officials' views of the proper pace of policy. 75 basis points at that November 2nd meeting, but slower after that. Quote, a substantial majority of participants judged that a slowing in the pace of increase would soon be appropriate. The reason cited, uncertainty about the lagged effects of tightening already in place on the economy and inflation. A few thought the pace of the rate increases could reduce the risk of instability in the financial system. But the pace of rate moves, the minutes say, was becoming less important than the ultimate destination for the federal funds rate that would get the inflation rate going back down and how long it would be held there. On that, there does seem to have been some disagreement. Many participants, the minutes say, felt there was significant uncertainty about the ultimate level of the Fed funds rate needed to bring inflation down, and, quote, their assessment of that level would depend in part on incoming data. Even so, quote, various participants noted that with inflation showing little sign thus far of abating and supply and demand imbalances in the economy persisting, that level was, quote, somewhat higher than they previously expected. Now, the interesting thing here is various is a construction I don't remember seeing in that context before. It's hard to tell from that phrasing what support there is for a higher terminal rate. How many people think they need to go above the 475-ish rate that they had put into the September dot plot. Chair Powell suggested we would see something like that at his news conference after this meeting. The issues that hit the UK's gilt market were also discussed, with participants saying they needed to make sure everything was working in the Treasury market, and they felt it was at the time. And they also began the meeting with a discussion of ethical standards at the Fed, with participants reminded they needed to hold themselves and the staff to the highest levels of conduct.
All right, the S&P was about at 40.13. The knee-jerk reaction, Mike, was about 5 points down on the S&P, then about 5 or 6 points up here. I'm curious as to when you look at this release here, and more importantly, some of the commentary we've gotten out of Fed members over the last 3 weeks since that meeting here, does all seem to be synced up? Is everything in line?
It appears that way, at least in terms of what the pace of increase is going to be at the December 14th meeting. The idea that a substantial majority agreed at this meeting, and from what we've heard from the participants since then, you can pretty much assume it's going to be 50 basis points. The interesting thing is going to be how high do they go? We've heard from a number of people, including Mary Daly, who says 475 to 525. Jim Bullard says 5% to 525. But there are only two people out of this whole group of 19, and it'll be interesting to see if more people between now and then start talking about where they think the terminal rate's going to be. Of course, we have Jay Powell speaking a week from today, 2 days before the Fed blackout, and that's going to be what everybody's looking to next.
Well, Mike, I was hoping you could just quickly walk me through these two headlines, how they relate to each other. Most Fed officials backed slowing the pace of rate hikes soon, but still various Fed officials saw rates peaking at a higher level. So could we just be going to a higher endpoint, but it's just going to take slower to get there?
Yeah, that's the slower but higher argument that a lot of members have been talking about without putting necessarily a level on the higher, but the idea that they would have to go a little bit higher to get a little more restrictive, but by going at a slower pace, they could keep an eye on the economy and inflation and see what's happening in the data and maybe not tighten too much and send the economy into recession.